Hello? Hello? Can you please confirm whether you can see my screen properly and also listen my voice properly? Could you please confirm, all of you? Great, Satya. Great, Amit. Great, Gaurav. Right? So, I think all of you can hear me and see my screen properly. And let's start. And today I'm going to discuss a very important topic, which is how to prepare your trading plan, which is successful in nature, and how you're going to do this, right? So let me just start with just a few points, like how to prepare this successful trading plan. And your trading plan, it's going to be your business plan. Today, I'm going to share with all of you the template of my trading plan, and we're going to discuss each aspect of this trading plan, and we will customize this as per you individuals. So treat this trading plan as a stands uh, alone template which you're going to use as your business plan. And I'm putting as much as information, but for each individual, this is different. So try to put as much as information about your trading style, risk management, and position size. Whenever you're gonna do your trading, read this every day before the start of your trading until it fits into your subconscious mind, which gives you an edge. Say, in any emotional act, if you think that you're gonna not follow your rules, then it will actually helps you and tell you, no, you are doing something wrong. You just gonna stick with your principle, right? So is everybody is okay? And we're gonna start our trading template. Please confirm me with yes. Okay, Gaurav. Okay, Amit. Great, Satya. Amarjit, are you there? Okay, so let's start. So this is my trading plan, and this is the plan actually which I follow very rigorously. आपका जो ट्रेडिंग प्लान है वो आपका एक बिजनेस प्लान होना चाहिए. आप इस ट्रेडिंग एरिना में आए हैं एंड ट्रीट दिस एज अ बिजनेस बिकॉज आप एक्सपेक्ट करते हो कि यू विल गेट एन इनकम फ्रॉम हियर. सो एनी इनकम which can come from any business activity, they should have a plan. हम अपनी एकेडमी में कोशिश करते हैं कि हम सभी का एक प्लान हो जिसको हम रिगरसली फॉलो करें. We are not going to do anything haphazardly, like with any tips or recommendations, or if people are doing that, we should just simply follow. No, we analyze it qualitatively, we analyze it quantitatively, and then once it fit into our system or it fits into our trading plan, then only we gonna take any particular trade. कोई भी ट्रेड जब हमारे सिस्टम में फिट होगा, then only we gonna trade it. I'm gonna send this template to all of you, which I request you put your things into it and send it back to me so that I can give you my expert opinion on whether you're gonna modify some things or it should be okay, right? So this is a trading plan with of our academy, and we have, and the bottom line is plan your trade and trade your plan. आप कोई भी ट्रेड लेने के पहले उसको प्लान करेंगे, उसके बाद ही कोई भी ट्रेड लेंगे. कोई भी ट्रेडिंग प्लान के ऑब्जेक्टिव्स होने चाहिए. लाइक ऑब्जेक्टिव नंबर 1, दैट इज फर्स्ट ऑन प्रायोरिटी, रूल बेस्ड अप्रोच. हम कोई भी ट्रेड करेंगे, वी ऑलवेज गोना फॉलो आवर रूल्स irrespective of whatever be the market conditions. How lucrative can a trade could be, but no, if it's not fitting into our simple criterias, we are not gonna take it. So we're gonna follow our rule based approach and apply the techniques which we have learned during this physical course, and try to get an ability and confidence to successfully trade on a daily basis. On a daily basis, we may have some intraday trades. We also trade swings, and we also trade and build our portfolio. Objective number 2. Say, this is my objective, huh? You can accordingly modify and put your things into here. My objective number 2 would be, I'll start with an equity and future trading account where I have the capability to deal in cash markets and also in the future and the options market. With an account of 25 lakhs, and I'll trade only 1050 contracts, means 14 lots of Nifty per position. That would be my maximum limit depending upon my trading account for 3 months. You know, when we are discussing about the quantifiable, date bound and all those targets, then it should be like this. Like, this is my capital, and from this capital, I'll trade this number of lot of Nifty depending upon my capital for first 3 months. And after 3 months, I will review my performance, how I have done, and then trade with that same system, or if my system is consistent, I can increase my contracts. But the important thing on this 25 lakhs amount, I'm not gonna risk 10,000 rupees per trade, which is roughly equal to 0.5% of my capital. Actually, it's 12,500 as per the 0.5%, because 25 lakhs, so 1% is 25,000, but still I make it a low of 10,000 per trade. Remember, ध्यान रखिएगा, 10,000 per trade मैं रिस्क ले रहा हूं with my trading account of 25 lakhs. Accordingly, if I have a trading account of 5 lakhs, the maximum risk permissible to me is 2,500 only, 0.5% of my capital, right? So that is my objective number 2. My objective number 3 is, Like this is objective number 2, it's for future and nifty. I'm also dealing in options, so my objective number 3 is I'll start with a nifty straddle options trade account of these 20 lakhs. Here I could also build some more strategies, like which I apply actually, which is strangle and iron condors and butterfly spreads, right? So this is you actually modify as per your trading styles. As soon as you learn new techniques, you can also put in here, like, okay, I will start with straddle, then I'll go with the strangle, I will apply iron condors, butterfly. And for options trading, my account size would be this. And after 3 months, again, I will review my performance, how my options trades are performing, whether I have a good system, I'm getting profits, or I'm in losses. My objective number 4 is I will only trade liquid stocks in group A or nifty stocks. What I mean about it, I'll only trade in the stocks which are liquid enough, in which there is a very less spread, and they are in either Nifty Liquid 15 or Nifty Liquid 50 or Nifty 100. I won't go for the cheap stocks, like the stocks which are of 5 or 10 rupees, where people are going crazy because they think that this 5-10 rupees stock is pretty cheap. Today I have a discussion with the great investor here, and we are just discussing about this. For the people, the 6 rupees stock, it's more attractive and cheaper rather than a stock of 50,000 which is MRF. But in real sense, if we analyze fundamentally, that 50,000 rupees stock is still cheaper in terms of its valuation than the 6 rupees stock, right? Which we have learned. So we can objectively identify which stocks we gonna trade and which we don't touch. हम cheap stocks जिनका कोई fundamentals नहीं है, they just work on this pump and dump principle, we not gonna trade with them. Now the objective number 5 is I have a target return of 5% to 10% per month. What it means about it? Means I have a realistic target depending upon the capital deployed, and if in a month I'll achieve my target, I'll stop all my trades, right? That is a very important statement. I am looking for a profit on my capital from 5 to 10% only. And if I am able to get that profit, I am gonna double my income within an year, right? हमने क्या सीखा था? हमें अपनी रकम यहाँ पे डबल ट्रिपल नहीं करनी है, हमें एक कंसिस्टेंट बेसिस पे मनी कमानी है, which is very good for 5 to 10%. But ये जो मनी हमारा जो टारगेट रेट ऑफ रिटर्न है, that is going to be consistent. That is our focus. And the objective number 5 is my all trades will be rule based, and I will document with charts and maintain a journal. मैंने आपको बताया था कोर्स के लास्ट में कि आपको कैसे अपना हर ट्रेड डॉक्यूमेंट करना है, कैसे उसमें चार्ट्स लगाने हैं और उनकी स्टडी करनी है. दैट विल बी योर पोथा पत्री of any business where you can go and see your performance, how well or bad you have done during that phase of your business. These are my objectives, right? अब हम आते हैं हमारे रूल्स की तरफ। हम क्या रूल्स डिजाइन करेंगे? हमने देखा था कि बाई जोन और सेल जोन का क्या महत्व है। तो हम वी विल मार्क 3 बाई जोन्स एंड 3 सेल जोन्स। कैसे? लेट्स गो टू द ट्रेड टाइगर। हाँ, यहां पे हम आते हैं और यहां पे से हम कोई भी स्क्रिप्ट ऐड करते हैं। ऐड स्क्रिप्ट से एसबीआई, स्टेट बैंक ऑफ इंडिया, हमने ऐड किया। सपोज एसबीआई हमारी टारगेट लिस्ट में है और हमें उसको ट्रेड करना है। हम डबल क्लिक करेंगे यहां पे तो हमारे पास एसबीआई का चार्ट ओपन हो जाएगा। I'll remove all these indicators first so that we can see the chart clearly. I'll go to the daily chart, change interval, daily chart. Here, I'm gonna mark supply sell zone and the buy zone. I have special things, but I'm gonna take it simple, like with this, just with a horizontal line. So this is my sell zone. This would be my sell zone. And similarly, I'll make a buy zone. For with the recent data actually, and this will be my buy zone. So I mark this on the daily chart. Up, I'm going to my execution time frame. You see, first let's see and go to 5-day 60-minute. So this is the 5-day 60-minute. And if I go for a bit more, 30 days 60 minutes, here you see this, these two lines which I have marked on the daily chart, right? This is my sell zone and this is my buy zone. I'll have in my 60 minutes chart like here. So you see, this is my sell zone, which is from daily chart, and this is down below my buy zone from the daily chart. So I have an idea, okay, this is the buy and the sell zone coming from the higher time frame, which is daily chart. So I'm gonna trade accordingly. Whenever the price comes here, I'll gonna sell. You see, whenever price comes in this zone, it has reacted. And right now I am near the buy zone. So I have two choices. If I am an aggressive trader, I can take entry here, or ideally, when I have the price in this range, which is starting from 270 to 266, then I make SBI long or SBI buy from here, right? If this concept is clear to you all, please say yes. Okay, so that is what I meant about this thing. Now, so I'll make 3 buy zones and the 3 sell zones depending upon my time frame. And here actually in this 60 minutes, I could also make a small buy zone here. I'm going to use just my tools, right? And this is going to be my sell zone, and this support becomes the resistance. And another buy zone I have here. So you see how the price has been reacted. So first of all, you need to identify from the higher time frame and then successively go and try to make different zones for the lower time frames. And then in whatever be the way, if you are near to the sell zone, you're gonna sell, and if you are near to the buy zone, you're gonna buy, right? Okay. And then you need to identify the trend and mark the current stage of the trend. So depending upon your time frame, we have seen how you can mark those trend lines in our course. So I hope you all are very comfortable with this. And then you're gonna see from the, you mark first of all your higher trends from the daily time frame, then you successively go to 60 minutes time frame, and then you go to the 10 minutes or the 5 minutes time frame, which is your execution time frame. And trend will always be determined on the daily chart. So let's see the same SBI on the daily chart. So if I see here in which way we are, can you identify this pattern? Anybody can tell me what this pattern is, where my mouse is? Fast, fast. Let me know what this pattern is, which you see here in SBI. This is the pole and this is the flag. Remember? Got an idea? This is the pole and this is the flag. Right? So what it's the trend line here? What would be the trend line here? This would be the trend line. Roughly closing, cutting all the means. The overall trend of the SPI is down. It doesn't mean that on our execution time frame, which is 5 to 10 minutes, we're gonna straight away short SBI. No. We get the information from here. The overall time, the higher time frame trend of the SBI is down, and it's forming a pole and a flag pattern, right? So we have a view that the SBI could go down, and we know that the SBI buy zone starts from 270. So here, if we're gonna short, then we're gonna close our trade before that, or we're gonna wait till the price reach to 270 and expect the SBI to move up from here. But always remember, we're gonna put our stop loss at this line, which is 266. Remember, we have discussed we need to apply all our technicals, all our fundamentals, and all of our knowledge, but with our friend. Who is our friend? Tell me, please. Who is our friend in trading? Exactly, the stop loss. Good, Satya and Amit. Right? Okay. So let's again go back to our trading rules. Always use the candle charts. We prefer to use always the candle charts because in this we can actually find out the patterns which we have learned, the bullish patterns and the bearish patterns, right? Good, Gaurav. And let me show you some other charts as well. This is the candlestick. Hmm? You have the line chart which we have seen, you have the bar chart which you have seen, you have the candlestick charts on which we gonna trade most of our trade, but you also have a chart which is called the Heikinashi. I'll explain about this chart later in our program. And this is also quite an understanding, it's very, very beautiful charts. It filters all of the noise. Another chart you have, which is called the Renko chart, which is K. This also I'm going to tell you when we're going to discuss all these charting in our advanced schedule, right? So you get all the information from these different charts, but the patterns and the trends are very much visible on the candlestick charts. That's why we prefer to use the candlestick charts, because in candlestick charts, if we are near to the buy zone or the sell zone, then they have a tendency to show a prominent pattern, which if that's near to the zone, it's very important. So in candlesticks, we can actually identify pretty easily the turning points, right? That's why, but we're going to use all of the charts in our successive trades and the course. Always use multiple time frame analysis. Multiple time frame analysis, you understand what I mean about this? Means we gonna go with the daily charts, we see what the kind of patterns are forming, what that we draw our trend lines, we draw our buy and sell zone, we gonna see where our trades positions are, हम कहाँ पे ट्रेड हमें लेना चाहिए, हम अपना व्यू फॉर्म करेंगे, फिर उसके बाद हम देखेंगे उसको 60 मिनट चार्ट्स पे कि 60 मिनट चार्ट्स पे उसकी क्या लोकेशन है, कहाँ पे वो एक्ट कर रहा है. देन उसके बाद वी गो टू आवर एग्जीक्यूशन टाइम फ्रेम विच इज 10 मिनट्स चार्ट. यहां पे हम अपना ट्रेड लेंगे एज फ्रॉम द टॉप डाउन अप्रोच, राइट? तो दिस आई मीन अबाउट we always use multiple time frame analysis, right? Price interval of multiple time frame will be in multiple of 3 or 6. That means 10 minutes, 30 minutes, 60 minutes and daily time frame, right? 10 minutes, 30 minutes, 60 minutes or daily time frame. That's this time interval we gonna use in our analysis. I will also check the stock's relative strength to its sector and the indices. Means, say if I'm interested in SBI, Abhi SBI belongs to the banking sector. So I also needs to see how the banking sector it's doing. So to do this, I can add script. I can go to the indices here and Nifty Bank. So this is the indices of the banks. And I'll also open this Nifty Bank. I'll go with the daily chart here. So this is the in alignment with the SBI. Means you see how this SBI was moving down and accordingly the bank nifty, it's also moving down. And we can also mark our buy zone and sell zone on this bank nifty, which it's a collective information of all the major banks in India, 15 basically. So that's how we're gonna do our sector approach also. That's I mean about the sector. And I identify sectors showing strength and also the sectors which are showing weakness. हमने कोर्स में देखा था कि जब हम मार्केट लिस्ट बनाएंगे तो हम उन सेक्टर्स की भी लिस्ट बनाएंगे जो कि अप ट्रेंड में है, और उन सेक्टर्स की भी लिस्ट बनाएंगे जो वीकनेस में है. हम उनकी अलग अलग मार्केट वॉच लिस्ट बनाएंगे एंड अकॉर्डिंगली जो स्ट्रेंथ में है सेक्टर्स उसमें हम हमेशा लॉन्ग अपॉर्चुनिटीज और बाई अपॉर्चुनिटीज देखेंगे, एंड द सेक्टर्स हु आर वीक हम उसमें हमेशा शॉर्ट अपॉर्चुनिटीज देखेंगे. So the strategy will be to sell sectors which are showing weaknesses and buy sectors which are showing strength. I'll also make a note of global markets, how the global markets are behaving. To get the best of the global markets, I can show you the site which is SGX Nifty. sgxnifty.org. If you go on to this sgxnifty.org, and here you can click on the world markets, it will give you the world markets like what has been down. Dow has down, S&P was down, Nasdaq it's down, FTSE. So European markets are down, FTSE, CAC, DAX, German, and the Nikkei and Hang Seng's Asian markets are also a bit down. And all the US markets are down. They have an impression about the opening of our Nifty tomorrow. But this is not, they are still active. These markets are still running. So you don't form a view with their current status. You're gonna do it tomorrow in the morning when you are gonna take a trade. You go to this sgxnifty.org and have a look on the world markets, how all the world markets are doing, and also you can see some of the currency pair, and we are interested in USD INR, how the USD INR it's doing for that particular day. So we form a kind of conclusion about the market, that in which probable way the market could go, right? Never ever trade stocks on the day of their results. As we are rule-based trader, we are not gonna looking for quick profits. We are looking for the handsome, smart, little, consistent profits over the years. Because on the day of the result, a stock can move in any direction pretty rapidly. So if you are not in a position to manage your trade, then you may be in a position of heavy losses. So why are we gonna do that? So we never trade stocks on the day of their results. We're gonna trade the stocks after results. So we know their clear-cut direction, in which directions they are going, and we will just ride on them and make profits. I'll follow my risk management rules with religious discipline. I won't deviate from my risk management. Always honor stop loss. And I'll also be aware of the FIIs, foreign institutional investors, and DIIs, domestic institutional investors, buying and selling to have a feel of institutional activity and market breadth. So that's information you can get from the advanced decline ratio in any of the site, where you can see how many scripts are advancing and how many scripts are declining, so that you get an idea whether the FIIs and the DIAs are buying or selling. You always maintain an updated calendar on economic reports, IIP numbers, inflations, RBI credit policy, GDP numbers, reporting. So these are all the financial data. You don't need to go on to the details of them. What you just needs to know, what are they and what their impact is. That's it. Whether it's going to be positive for the market or whether it's going to be negative for the market. Always be patient. Do not force a trade. Wait patiently for your proper entries. You know, we have discussed we are not a random trader that we just take simply anything from anywhere. We gonna wait and do a sniper attitude and go for killing. So whenever market opens, which is at 9:15 a.m., wait. Don't jump onto any particular trade. At least for 10 minutes, form your opinion, see the behavior of the stock, and then only go for a trade. Because in bull markets, all the bad news of the stocks could be ignored, and in the bear markets, all the good news are ignored. And this is, be sure to show at least 100 bars per chart, and the 200 bars per chart means it's not a straight away recommendation, but at least you should be able to enough to see how the price is varying to draw your trend line. You shouldn't just be looking like 5-10 candles and form a view. Look for a better view and go back and see what are the major trends, where are the retracements, then what are the trends, and this. But don't go too far also. It's just 1 year or 2 years data, it's more than sufficient. Don't go for 10 years or 5 years, so that you actually will be confused what's to do and what to follow. And the strong trends are where the sector and indices all move together. Like in our case, we have seen in our SBI, the sector is also moving down, and similarly, the SBI, it's also moving down. So it's in alignment with the sector. And on the contrary, on the reverse side, if the sector was going up, like in this case here, it's going up, and accordingly the SBI, it's also going up. So that's what I mean about when the sector and the stock are on the same direction, then we have a high probable trades. There are certain sectors which are basically creating the move of the Nifty, whether up or down, which you can see. And write down all of your trades as well as the reason for entering them and reason for exiting them as your trade journal, which I have told you in the physical course. Very important. Always relax after an unsuccessful trade. Analyze that trade, figure out what went wrong, and learn from it. Look, we are in this trading business. Every business have their profits and the loss making phases. So here, if we are trading this, then eventually we have to understand that it's not going to happen that every day your trades are successful or every day you make money. But that's fine. If our losses are small and our profits are big, then we are going to be very successful in this market. But the most important thing is, whenever our trades are unsuccessful, after all of our analysis, they give us a very good lesson which we need to learn. Like what went wrong, whether my analysis was not right, whether I have discarded the main trend and goes against the trend, or I become too greedy, or I become too hopeful for this trade. I haven't followed my risk management principles in this. I make my stop loss too far, which got hit, and that's how I lose a lot of money. That's okay. It happens to everyone. But the most important thing is, if we get the lesson out of it from all of our unsuccessful trade, if we get the lesson that okay, that was my mistake and I am not going to repeat that mistake in future, it's worthful. That unsuccessful trade has this tremendous worth, right? So, and also, if you have 3 losing trades in a row, just stop. Make a red sign of stop. Try to figure it out what's going to be wrong and resume only if you have identified a good trade and also identified what's going wrong in of your last 3 trades, and resume your trading accordingly. In this trading business, it is very much required to be calm. So for that, your minds needs to have to relax. And the best recipe for the minds to be relaxed, to become a calm and peaceful trader, you need to do some meditations. I'm gonna have a class on the meditations only, where we gonna do different meditations, and I hope that will be very useful for your trading as well as your personal life. Now let's see the trading style. For intraday, the people have a lot of time. They can trade throughout the day. They are very comfortable using the computers, and their primary reason for trading is income generation. And they have a zero tolerance with the overnight risk. Whatever be the profits and the losses, they gonna have for that particular day. They are trading for a living, need a daily pay. On this also, during our intraday trading, we don't want to risk any of the trade with 0.5% risk of our trading capital. Now let's see the technology which we're gonna use. We're gonna use the Trade Tiger, which all of you have a direct access as a trading platform. And in any case, if you find some difficulty or you are not comfortable with Trade Tiger, you have all of our academy support. There are number of persons who will help you in any of your trades or in any of the execution of your order, or how you gonna understand few other things in the Trade Tiger. Trading computers, minimum 2 monitors. Remember, this is my trading plan, right? That's how I describe these things. But it's not necessarily that you have a 2 monitors. One is good enough. But if you have 2, the better. You should have the computers which you used exclusively for trading, where nobody else has an access to, because in Trade Tiger you have the same password and everything, so any person can log in and all those things. But it's okay, means it's just few things which you can take care of, or if you don't, then also it doesn't matter. Internet connection, it should be minimum 20 Mbps speed. That is very important. Ideally, you should have the best internet connection which is available into your area. And mind that the cost of that internet, it's just peanuts with reference to your profits and losses in the trading. So you shouldn't be deprived of any good opportunity just because your internet is not working or it's not fast enough to get you over that spread. After that, also you also have a backup with any service provider. Like I use the Tata Docomo and Reliance Jio as a backup. In our academy, you see, we have 5 internet connections. 3 internet connections of 25 Mbps. One is exclusive for trading. One is exclusively for the office people. And one that is exclusively for me, on which we are doing this webinar. And apart from that, we have this Tata Docomo, this Reliance and all those things. But for individual, they should have a good internet connection and a backup in a, because that internet connection may go wrong sometime, or it that comes into the maintenance. But still, if you have a second connection as a thumb drive or any of the USB port, then actually you can not be in a position to, that you are not in a situation to close your trade. But anyhow, you can always call the support people here and get their help to close or initiate your trades. You should have a set of 2 speakers for buzzing on your alerts, or you can also listen music of your own choice if you're on your system. And additional, you should have an extension cord, power kit, cable for monitor and CPU. Now let's go to pre-market schedule. Before opening of the market, I'll review sharekhan.com or moneycontrol.com for some of the headlines if there would be any major news. Look at the market snapshots, internals and markets. Read the trading. So just to get an overview, what these major websites are telling. Is there any results, or is there any particular RBI policy day or any earnings and all those that you can information from this. And the most important thing, read this plan every day first thing in the morning. Say you have 10 minutes before the market start, read this in just 10 minutes very quickly, so that it will eventually fits into your subconscious mind. You can check the Sher Khan for economic data release, upgrades, downgrades. You can also check this money control for map of the market. For international news, you can use this money.cnn.com or bloomberg.com. Check SGS Nifty pre-market indicators, which I have just shown you for the possible direction of the market open. Check possible opening prices of the stock against trading plan for those particular stocks which you have identified in your market list. You can also have a look on the forexfactory.com for the world economic news, that if there is any word major like the Fed meeting or any other important event. So that would be your pre-market. And what would be your post-market schedule? You have to prepare a trade log for the everyday's trade, and also review the charts which are in your watch list. Look for the patterns, check for different multiple time frames, and create some of your plans for the next trading day, that in the next trading day what probably you're gonna do. Check the top gainers of the day, top losers of the day, highly traded script for the day, and the sector indices, which sectors have gone up and which sector has gone down, so that you form your understanding and the view. Review market internals and charts on the indices, which you can see, and document the trade for your further learning. Make the table of trade with the calculation of the R multiple. I have shown you how you can calculate your R multiple, which you can go through in your course notes, course booklet. There you can find the R multiple, which is what was your initial risk when you have taken a trade, and what would be the result of your trade. So you divide the results of your trade by the initial risk which you have taken before the trade or estimated. That will give you your R multiple. Basically, it's the measurement of the quality of your system. And if you're trading in options, you also take a different sheet of the straddle, all the strangles with each entry and the exits and the steps of your entry and exit. Read your trading plan and make a worst case contingency plan. Document the situation and escape plan. If you have few positions which are running as a swing or in your portfolio, try to imagine the worst case that can be possible. And if that happens, then what you will do. That you have in your mind. Say if Nifty corrects 500 points tomorrow, what you gonna do? You shouldn't have to be reacting like, oh my God, what has happened? It's the end of the world. No, that's not. Actually, it's just the simple panic or simple things. But to be a sensible and a rule-based trader, I should know what I'm gonna do in those extreme market scenarios. That I should have an insurance or a plan where I could have an escape. Now let's go on to the daily trading rules. All my trading decisions will be based on triple screen system. What I mean by triple screen, like I'll see the daily chart, then I'll see the 60 minutes charts, then I will execute my trade on the 10 minutes chart. I will analyze the candles with reference to their color, whether green for bullish candle, red for the bearish candle. What is the shape, whether big candles or small range candles, the size and the location, whether they are near to the buy zone or whether they are near to the sell zone. Triple screen time for intraday, it's 10 minutes, 30 minutes and 60 minutes. So what I could have actually, I'll show you on this, what I mean about this. Let's just see the SBI only. I have a daily chart of the SBI. I'll make this 60 minutes. Say 5-day, 60 minutes. This is the chart. And now I'm going to show you an important technique that if you're going to open the multiple charts, how you're going to do this. You have this chart and click on the SBI with a control. Push the control button on your laptop or on your keypad and double click. You will have another window of the SBI. Do this again. You will have another window of the SBI. So what I'm gonna do, I'm gonna make it a professional layout which are being used by the professional traders. This and here. I'm not changing the time frame. I'm just right now orienting them into a professional layout. So here again all my indicators are coming, but anyways just for this sake of this, here I'm gonna change this to 5-day 60 minutes. This is my hourly chart, and here I'm gonna change this to 5-day, say 15 minutes charts or 30 minutes charts. So this is my half hourly chart, and this is going to be my execution time frame, which is say 5-day 10 minutes charts. So how this helps me, it gives me an information that what is happening actually in 60 minutes higher time frame, what's happening in the 30 minutes, and what should I expect to happen in this my execution time frame. Like in this case, if you see, I have a downward pressure in the 60 minutes. Similarly, I have a downward pressure in 30 minutes. And see, accordingly, this is the EOD data. and accordingly my execution time frame also gives me that good opportunity of that trade. So what could I have done depending upon all this scenario? I have shorted SBI here and I have booked my profit somewhere here. So means, and if the scenario is different, say if I am getting this, you see, I am getting this big green candles, which initially, if I don't have the information from the higher time frame, I would expect here that the SBI is trying to move up. But once I see the longer time frame, that no, it's just a random noise phenomena. The main trend of the SBI, it's going down. So that would be an ideal place for me to make it short because I'm getting it on a higher price. So I short it somewhere here, and depending upon my risk appetite, I can book my profits here or somewhere here. It's up to me. It depends upon the individual. But if I haven't seen the higher time frame before, I don't have a clue here. If I have just seen this in this after 10 minutes, this is after 10 minutes, the second candle of the 10 minutes, the usual direction I should have taken, it's go long. And if I am not in accordance with the higher time frame, you see what happens afterwards. So that happens actually to the normal traders, but not for us because we are professional rule-based trader. So that is basically this 3-screen layout, which I would recommend every one of you to follow. And you can have a look on the gaps, which I have told you in the course. Novice gaps, the gaps which are forming along the major trend direction, and the professional gaps which are forming against the direction of the main trend. You mark 3 demand zones and the 3 supply zones, basically the buy and the sell zone on 20, 30, 60 minutes, which we have seen. We'll make a note of the higher time frame, buy and the sell zone by analyzing on the daily charts, which we have seen, which look for the market index and identify the correlation with the stocks, which we have seen. No trade for the first 10 minutes, just watch and initially start with very small contract. Like my day contract was 1050, but I'll just start with 300 contracts. Basically, these are 4 lots in Nifty, and try to follow what has happened with those 4 contracts. And if these 4 contracts are going into my favor, then I'll increase my position size. Remember, here in Academy, we only gonna average our winning position. If our trades starts to go in the opposite direction, we are not gonna average them. We only gonna average them once we are winning. So we are actually multiplying our profits, not multiplying our losses. We will use some indicators like the super trend, PSAR, EMA 10 and 20 crossover for our entry and the exits, like the system which we have seen in the course. And whenever we have a crossover, we're gonna take that trade, but we also look for what's our super trend is telling us and also what our PSAR, parabolic SAR, is telling us. So they gives us the kind of confirmation about our trades. So if we're gonna entry after our all the analysis, if we're gonna trade long, then we identify the pattern, the trend, and the entry type. Identify because we are going long, so we should be near to the demand zone or the buy zone. And we buy at proximal line and stop loss at distal line. What I mean about this? Say if I look on this daily chart, so if my price is somewhere here, this is going to be the first line, H3D 270. It's going to be my proximal line close to my price. this line. And my distal line, which is a bit far from my price, which is this one, 266. So I buy SBI once it moved to 270 or 271, and put my stop loss at my distal line a little below. It's 266.68. So I'll put my stop loss somewhere around 266, right? So that's how I will plan my trade. And we are trading long, so we always look for higher highs and the higher lows, which we have seen in our course. We should have that pattern which gives us the higher highs and the higher lows. I'll make this 5 and 10-day moving average crossover. You can also define it with 10 and 20-day moving average crossover. That should also give me a bullish sign. The pattern should be the rally. Let's see quickly. What I mean about the rally-based rally, say if you have a price which is moving up, then it remains sideways, and then it started to move up. So here, this is a rally. And this is the base. And again, you have a rally. So we look for the pattern which gives us this information: rally, base, and then rally. This is going to be our typical long trade setup. We are looking for this kind of pattern. And when we're going to take entry, as price enter to our buy zone, as or price already in the buy zone, and as price is reacting and leaving from the buy zone to the upward direction. And all our entries will be decided based on the market volatility, which is the ATR, which I have told you how you're going to place your stop loss so that you shouldn't be hit by the intraday noise. Now, if we're going to trade short, same things: identify the pattern, trend, entry type, identify the sell zone, buy at proximal line, stop loss at distal line, as in the case of this long trade. And here we're gonna see the lower lows and the lower lows on the daily charts. Same strategy: 5 and 10-day moving average crossover along with the super trend, along with the PSAR. We also gonna use the RSI and the MACD to confirm our trades. And here the pattern could be drop, base, drop. So here the pattern would be drop, base, drop. So here it's drop, and here is the base, and here is the drop again, right? So this kind of pattern we are looking in our short trades on a crude sense, on a bigger time frame, bigger analysis. Entry type, the same as the long entry: as price enters the zone or in the zone, as price leave the zones. Stop loss should not be at any cost the 1% of my capital. If I have a capital of 1 lakh, my stop loss shouldn't be too far where I can lose more than 1,000. And it's also not like just 1,000. It also should be at a logical location. Like If I have a logical location as per my ATR that it's more than 1,000, it's roughly 3,000, then I'm not going to take that trade. I look for some other trades where I have an opportunity, and also my ATR stop loss, it's within my range. 1%, it's not like 1,000 as a crude. It could be 1,100, 1,200 approximately, but it shouldn't be like 3,000 or the 4,000. And that's how we're gonna identify and just select those trades where I could have that limited risk. In intraday trading, the maximum two, because you need a lot of management, but you can also afford the three position at a particular given time if you're going to trade them on a swing or on a portfolio basis. And I'll do the trade management. I'll raise my stop loss to cost once price move the extent of initial risk. If the trade goes to my favorite direction, then I'll remove my stop loss from my initial risk and put it cost to cost. And if the price has achieved my target one, I'll book 50% profit. And once I have booked the profit target of 50%, then for the remaining position, I'll put that stop loss onto a lower time frame. Like if my execution time frame is 10 minutes, I book my profit 50%, then I'll go to the 5 minutes time frame and put my stop loss close to my price, the current price. And if that price again goes to my profit target, I'll book all of the profits at my target 2, which I have predefined during the initiation of my trade, right? Now let's quickly discuss. We have done with this trade plan, and I'll send this template to everyone. But to be more meaningful, we're gonna discuss a few of the aspects of the trading psychology also. You need to ask these questions to yourself. Do I treat my trading as a business? Have I prepared it like a business way? These questions you need to ask yourself and get a meaningful answers. Okay, if I trade my trading as a business, do I have a business plan? Do I have a working document to guide my trading business? How are I gonna do that business successfully? That's what we have discussed so far. Do I have a set of written rules to follow? If I have a business, do I have rules to do that business? Am I following a process to prevent mistakes? A mistake means not following my rules. That is the mistake here in trading business. Do I have a plan which actually prevents me to not to do those mistakes? Do I have a tested system? And remember, a system at least requires 2 to 3 months for its efficiency to be tested. A system can't be tested by 2-3 trades. If 2-3 trades goes on a losing position, then it doesn't matter that the system was not good or worst. You have to give some time to your system. Do I know how my system will perform in different market conditions? That's what I mean about give it a time. Because say for 3 months, the market could have different directions, bullish, bearish, sideways. So how my system actually it's performing in these different market conditions, and whether it's actually meaningful for one particular set of market conditions, that's also a huge advantage for me. When I see those market conditions, I will straight away apply that particular system which suits in that conditions. Do I know what kind of markets we are in and how my system will perform in such conditions? And remember, all the systems we have discussed in our trading plan. If I don't, have I gotten out? If my system is not performing well and if I am in a losing trade, how fast I have gotten out. Do I have an exit point pre-planned for every positions currently have in the market? If I have 3 intraday trades, 2 swing trades, and a portfolio, then do I have their exit points predefined where I would like them to touch, and there I should book my profits? Have I developed specific objectives for my trading? It shouldn't be general that after 5 years I'll do this. No, it should be within 1 year. What is my capital? How much rate I'm interested in to get that capital to grow? What system I'll follow? What rules I'll follow? What would be my trading style? And how I am gonna prevent any catastrophic events. Do I understand that I can achieve my objectives through position size, which is very important because as we have more emphasized on the position size, that in none of our trade the maximum risk we should have it's 1%, so that's we gonna follow rigorously. Do I understand the importance of the points above? Okay, enough of all. Do I really believe that these points are very important? Do I believe from my inner soul, or my subconscious mind actually tells me, yes, this is very important to be in this market and get a consistent amount of money in this market? Mark my words, dear friends, it is my own experience. The more you respect, give to the market, the more you try to treat this as a business, the more market will give you as of profits. So that's what actually these things you needs to be put in up into your thoughts and also in your beliefs. Like, okay, these are my thoughts and I am straight away without any expectation believing on all these thoughts and the beliefs. And do I accept the responsibility of that creation? If you become a professional profitable trader with all these of your efforts, I'm very much sure you all can be. And for that, you need to accept the responsibility about your trading plan, your rules, your investment criteria, and you need to follow them without any exceptions. Do I regularly work on myself to make sure that I strictly follow the points above? Very important. That's what I tell you all to read this document every day. And okay, we just quickly go on to, I'll just speak about some steps for your consistent profit. Work on yourself and your personal issues so that they won't get in the way of your trading. Develop a business plan as a working document to guide your trading. Develop several trading strategies that fits your view on the big picture. Thoroughly understand your objectives and develop a position sizing strategy to meet them. Monitor yourself constantly and minimize the number of mistakes you make. Very important, you produce the results you get as a trader. When you understand that, you realize that you must make changes if you want more effective results. You must produce that changes. Empower yourself. Test. You should have a positive expectancy system with the positive R multiple. Have a system that fits you. Every individual is different. So it doesn't matter and you shouldn't be bothered about what else are you using. If you are having a very simple system and you have tested it and you believe on it, that suits your personality, just go with it. Put that system into your beliefs. You should understand the concept which you are trading and how this concept generates some low risk ideas. When you put into a trade, you must have a point where you prove wrong and get out. That would be your stop loss. Or if you think that your trade has gone completely wrong, then you shouldn't have to wait till your stop loss is hit. Exit, simple exit. Don't wait for the stop loss to hit. You should have a risk to reward ratio of 1 is to 3 or 1 is to 2, but never ever go to a risk reward ratio which is less than 1. 1 is to 1, it's okay in some of the intraday sense, but at least you should have 1 is to 2 or 1 is to 3. All the great traders whom I have worked with and got an opportunity to spend time with them all have a business plan, a very concise, illustrative, based on their needs to guide their trading. Good traders always use a position size methods, and they have the clear objectives written out what we are trying to do today. All the great traders understand the performance is a function of personal psychology, and they spend a lot of time on it. That's why you have tried to observe me that in spite of trading, I'm very much focusing on your individual's personality, your beliefs, your way of thinking as a trading. Because once you have the good belief, good mindset, good attitude, rule-based trading plan, then I can assure you all of you will remain for a long in this market. And once if you are remain in this market for a long, then definitely you will make a lot of money. And all the great traders take the responsibility for the results they got. So I expect you guys also take that responsibility for your own results, right? So I guess all of you have got some good insights about the trading plan and the trading psychology. I'll send this file to all of you as a template, which I expect you fill your things into it and send it back to me so that I can review it. Right? So I think today's session was useful for you. Whether you can let me know whether it's useful or it's up to your expectations. Hello? Great Satya. Great Gaurav. Great Amit. Okay, guys. Okay, so thanks a lot for joining me live. And you will get the recordings of this session, which is going to be with you for next week or so. Then you can listen these recordings to multiple number of times whenever you find the time. And I'll send this template tomorrow. My colleague will send it to you. And happy trading, and see you on next Thursday, where we're gonna study on some other advanced topics, right? Have a good night and happy trading. Wish you best of luck to all of you, right? Okay, bye-bye. Take care for now.